That's great. Thanks, Murray. On behalf of Beta Pro Management, I welcome everyone here to our first ever Bull and Bear Aftermarket Energy Symposium. Great to see such a good turnout. I wore this striped shirt on purpose just in case I need to get in between our two speakers later on, but hopefully that won't be necessary. I'm going to give you a quick overview of Beta Pro. We've been very fortunate, I think, to be in the right place at the right time, and thanks to the support of investors not only in Canada but in Europe and the U.S. Probably many in this room are familiar with our products. For those of you that are not, we are the exclusive provider of leveraged and inverse leverage ETFs in Canada. We are the fastest growing ETF company in Canada, both in 2007 and 2008. We're close to $2 billion in assets, and that's from $100 million in January of 2007. We're also the second largest ETF provider in Canada by assets under management. And we were the first in the world to offer leveraged and inverse leveraged commodity ETFs covering the commodities oil, natural gas, gold, and grains. So currently we track 14 different benchmarks, and for every benchmark we give you a Bull Plus ETF that gives you 2 times the daily performance of the underlying index, and a Bear Plus ETF that gives you 2 times the inverse daily performance of the underlying index. We rebalance the portfolio at the end of every day, so your risk is limited to your capital invested. And of course, many of you are starting to realize the advantages of ETFs over mutual funds, which are lower cost, tax efficiency, and intraday liquidity. Just a little bit of background on our service providers. Currently, we have the largest offering of ETFs in Canada at 29 and account for about 50% of the Canadian ETF volume that's traded on the TSX each and every day. And just to put that in perspective, in January 2007 when we launched, we accounted for, as an industry, ETFs in Canada, about 2% of the TSX volume. That has grown to, many days now, over 15% of the TSX volume is Canadian ETFs. Last week alone, Beta Pro, for example, was about 9% of the TSX volume. You heard Adam mention that Jovian Capital Corp, largest shareholder, Murray Edwards, owns 60% of Beta Pro. Our custodian is State Street, the largest in the world, and we do have a relationship with ProShares out of the U.S., and they're the leading global provider of leveraged and inverse leverage ETFs. They have over 130 products with about $25 billion in assets under management. Here's a little chart of our growth in terms of assets. Interesting, we started as a mutual fund company with Bull and Bear Plus ETFs in 2005 when Adam founded the company, launched our ETFs in 2007. It's very interesting. You can see the growth on the screen in front of you. But for most of our life, we've been we call a bear shop. Most of our assets, 2/3, 3/4, have been in the bear ETFs as opposed to the bull. And then this past October, where you see sort of that V on the chart, all of a sudden assets swung, and today we're 85% across our family on the bullish side and 15% on bear assets. Also, I think you can see on the graph that our assets have recovered much more quickly than your typical long-only manager because we do have both sides of the trade. Here's a list of our complete family showing 30-day trailing average daily volume. And I'm focusing here, for obvious reasons, on our energy, natural gas, and oil. And every one of our bull ETFs ends in U for up. So if I say U, that's what I'm talking about. And every one of our bears ends in D for down. Try to keep it very simple. So the energy, for example, that track energy stocks, it is our HEU, for Energy Up, is our 4th largest ETF. HNU is our 7th largest, that's Natural Gas Up. And whether you're looking at energy or natural gas or our oil down product, if you compare it to those products to any other products listed in the world, they are the most actively traded of their kind, leveraged and inverse leveraged ETFs. And that brings us to HOU, which is a story unto itself. Today was a record trading day for HOU, which gives you 2 times the daily move in the price of oil to the upside. Didn't have a good day performance-wise today, but it did trade 55 million shares today, which is phenomenal. And up till recently, our most active day across our complex was 40-something million. Last week, HOU was the most active security on the TSX of all securities, not just ETFs, but single names as well. And I think this is a very interesting stat. In the month of February, there was more dollar volume traded in HOU than there was in Suncor and Canadian oil sands combined. So obviously, the investment community has embraced these products. When it comes to our commodities, and we'll focus on oil and natural gas here, we do reference the nearby futures contract of the respective commodities. All of our ETFs, including these, trade in Canadian dollars, and your US dollar exposure is hedged back. So you do get the movement in the commodity times 2 or minus 2 that you would if you're trading in US dollars. Specifically, just focusing on those two again, we use the WTI contract priced in Cushing, Oklahoma for oil, the NYMEX oil contract, and the NYMEX natural gas of Henry Hub. And we roll to the next and nearby over 3 days early each and every month to maintain exposure. The energy names, most of you are familiar with these names. We've got quite a few of these names in the room. And this is the energy index, and our HEU and HED tracks this S&P energy index. Here's just a quick chart on our volume. In January of last year, we were trading about 5 million shares a day across our complex. You see 10 on there because that's a TSX, or Toronto Stock Exchange chart, and they double count everything because they charge for buying and selling. But 5 million shares across our complex. Now, today, end of the year, we're trading about 30 million shares a day, but just recently we've had a couple of big days. Last Friday was our biggest day. We traded 65 million shares across our complex on Friday, and we broke that today, trading 82 million shares. So it just seems to be the usage just keeps increasing, and it's not only from Canada, it is also from the US and increasingly for Europe. Here's who's using Beta Pro ETFs. It's predominantly institutional investors, probably over 60% today, close to 2/3. We would include hedge funds, mutual funds, investment counseling firms, and small pension plans. And you can see on the right-hand side some of the mutual funds that have applied for exemptive relief. You do need permission, if you will, to use ETFs in a mutual fund structure. And with that permission, you can use Beta Pro up to 10% of holdings and 20% if you have shorting capability. So the names you see listed there have either applied and received this exemptive relief or are in the application process right now. The balance of our users are investment advisors and self-directed investors. Just very quickly covering some of the basic strategies before I turn the proceedings over to our moderator. Here's sort of the 5 basic strategies that we see being employed by investors. First, just if you want exposure to an asset class, long or short, very, very quickly, you can get that cash to work instantly with one trade. If you want index exposure, we call this beta efficiency, because you can do so with 50 cents on the dollar, liberating the other 50% to go into other types of investments. Alpha generation, the holy grail of investing, is generate some alpha. Here you can obviously make a directional play on a commodity or an equity or fixed income class going up or going down. But increasingly what we see by more sophisticated users is some form of paired trade. And for example, last year, a very, very popular trade was long single energy names and then short oil using HOD, and that was a profitable trade last summer. Fourth strategy, and probably our most popular, is to provide downside protection. Most portfolios are inherently long. Of course, if you want to dampen that volatility or limit the downside, you can take a bear position opposite that. And then finally, straddles. You can actually employ, similar to at-the-money option straddles, a long straddle or a short straddle, because our daily rebalancing does cause a compounding effect when the market moves in your favor. So you can actually affect a long straddle by putting equal dollar amounts in the bull and the bear, tracking the same index. And this